Hi, everyone. Welcome to the TimingResearch.com Analyze Your Trade, episode number 137 for August 26th, 2020. We are recording a special episode on a Wednesday at 6 p.m. Eastern Time. And it's going to be a solo episode with just the option professor. And we have a good list of symbols to go over today and talk about the markets and another special announcement that we're going to be making later in today's episode. So I'm going to go ahead and turn it over to the option professor, and you should be seeing his screen right now too.
Okay, thank you very much, David, and welcome everybody. It's a little later in the day for most, but we'll try to give you some good things to chew on here and make it very worthwhile for you. Again, today I'll be sharing our opinions and our observations, and obviously you should consult your own brokerage firm, broker, and advisor to determine what, if anything, is suitable for you. With regards to the chart on the screen, I'm going to start out here, and basically that is a 20-year graph on the S&P 500. And I'll explain something because we have a weekly market update free of charge that we send out to everybody. And when we got that big drop in March and April, right? We were telling people that that drop was accompanied by tremendous volume. And obviously, when you get tremendous volume like that, it obviously can't go on forever. Then the Fed comes in, and obviously the volume is dried up, so you snap back. But I was trying to explain to people that Secretary Mnuchin and Chairman Powell, they look at the same graphs as everybody else. And you can see if you would have just bought in when it turned up back in 2011 here, and just sat on things, and just followed the blue line all the way up, you obviously would have been very, very rich at the end of the day. Now, you would have got this, the bejesus scared out of you when we broke under here 2,600. And it probably scared the Fed and the Treasury guy very much too. But the direction of the average was still up, and they acted with full force. I mean, there's 44% fiscal and monetary policy of GDP that has been applied to this drop. Now, back in 2008, the amount, and it didn't even crack the line, was 5%. So we get the idea how much fiscal and monetary stimulus has been thrown at this thing. Down here, it's 5%, and over here, it's 44% of GDP. So that's obviously ridiculously over the top amount of stimulus. And again, it's all put in by guys who may or may not be here after November. So I don't know if they're just running up the tab, and then if it doesn't work out, they're going to be out of there anyway. But whatever they did, they knew they had to get it back above the blue line, and they did within what? This is March, that's April, and then basically by, well, April they had it above and it never looked back. So your buy signal to get back in the market was right around here. And we highlighted that in our free weekly update, which might have been very helpful to you. So that's why at the end of the broadcast, we're going to encourage you to go to the website, stick in your email, and get on the free list that comes out every week, because this is the kind of stuff that I go over. So obviously that's the story now. Now, where are we today? Today we're way up here. And as you can see, that's a long way from down here, and it's also a long way from the moving average, okay? The transportation average and the Russell have not broken out like this at all yet, which was the same problem we had when we were at 3,400. See, at 3,400, I was telling people that it was probably going to drop because the RSI, the Relative Strength Index, was lagging. Now, again, look at it lagging again. We made a high point here, and that's in February of 2018. And then we went into September, right? And then we had a big drop. Then we went way up here, and then we had a big drop. Now we're back up here again. So RSI has been declining. You understand that? So although it's above 50, which is a great place to be when you're bullish, it is not great to be making the kind of highs we're making and only have the RSI at 65 when it used to be at a former high there of 69, a former high there of 78, and a former high here of 83. That's a declining RSI while you're making new highs. I don't know if anybody took Technical Analysis 101, but that's not bullish. So what am I saying here? I'd say obviously be very careful about putting new money in. Why? Because after the splits of Apple and Tesla are behind us, and if they don't get a deal done, or if they get a deal done that is disappointing, and then, of course, this is all fiscal stimulus, right? And the revaluation. These companies are not making a ton of money than they did before. Apple has not made a ton of money more than they did before, but they're valuating them much, much higher because the 10-year treasury is at 0. So again, this is the liquidity run-up. Now it has to be followed by an earnings and also a GDP. And the GDP is probably going to be quite a long way away because we have 30 million people taking in unemployment. The earnings may surprise because they fired everybody and they abandoned their office space. So obviously with less employees and less office space, their earnings could come in stronger than people anticipate. However, in the short run, you'd have to be somewhat concerned about the extension above these moving averages that you're seeing. So my and our input is look to other sectors that have not gone up so much, and I'll get into that when I get into the stuff that I'm looking at. And I'll show you where I would be directing my attention. It certainly wouldn't be trying to plow into Apple at $550 when it used to be $350, and they haven't really come out with anything new, right? Right. Okay, so that's the story, and I'll get into some stuff in a little bit, but right now we're going to start hitting your list, and I'm going to look at it on a long-term basis, a short-term basis, an idea, so you get, when you're doing trading, as you guys know, it's always nice to look at different time frames to put prices in perspective. That's what I'm going to do for you today. All right, let's start out with the first one, which is Tesla, which is obviously going on its own motor. Again, they announced the split, which, again, does not change the value of the company, but it made the stocks go up because people want to get in before they split. Now, again, I'm not an expert on Tesla, but I did notice that they make an awful lot of money by selling these credits. And I don't know if that selling of credits game lasts forever. So we'll have to see what's going on. The stock remains strong in the aftermarket. I don't know exactly when it's supposed to split, but I'm sure it's somewhere around now. And so there's a final rush here to get in before the split. But again, the chart speaks for itself. There is your chart going back to 2015. Okay. So obviously this thing has just gone nuts. And again, if you're in it, God bless you. And if you're in a fund, which I have some ETFs that have Tesla in it, so obviously I'm not unhappy that it rises. But would I tell some guy to come off the street and start buying Tesla up here? That would not be something I'd be doing. Okay, so on a short-term basis, is there anything that can tell you anything? Let's go to a 6-month chart and see what that says. Okay. Now you're making a new high here over this high. Let's see what the RSI is doing. Yeah, the RSI is kind of hanging in there, so there's no real evidence of any diversion there. There's the moving averages. So, this is where if you're going to revert back to the mean, you know what that means? That means you go up here and you come back to the mean. You go up here and maybe you come back to the mean after the split. I'd be more interested buying it near the means, right? The red, green, or blue line than I would be up in the ozone here. And it's up to $17 in the aftermarket. So it's even going to be higher tomorrow, according to the aftermarket. Of course, that's not always exactly what happens, but they're still bidding for it in the aftermarket. So anyway, that's the way Tesla looks. I mean, you really can't say anything about it other than if you're in there, hold on for dear life and hope that it keeps going. Let's look at this Tesla real quick on a 1-month graph. See if there's any diversion that's a little bit more apparent in the RSI. Well, when you went up to this last high, where were you? You were on RSI approximately in the area of 86. And now with this brand new high, it's at 77. Yeah, I guess there is a little bit of a divergence. What you're thinking when the RSI is lower on a high move than it used to be, or if it's making a new low and it doesn't make a low on RSI, the idea is that volume might be drying up and that some of the activity is either short covering if it's rising or liquidation if it's falling. So the bottom line is that right now on Tesla, if you're in there, where would I probably put it on a short leash? I'd probably use something like this at 2050. And today's low is 2051. So you got the red line coming in around 2050. market's up here. As that red line goes up, if I want to keep it on a short leash, that's what I do. The green line is the one that hasn't been penetrated for a long time, and it got tested. So if you want to give it more room, then you could use the green line, which comes in, and of course that's the 30-day, and that is coming in at 2011. That's a lot of room from here. I prefer to keep it on a shorter leash, considering it's had such a big run. Okay, so that's Tesla, and that's what it looks like. Big, strong market, no doubt. Could keep going to 3,000 for all we know, because it's a nutty thing. And again, if you want to keep it on a short leash, you could use a shorter term moving average, and if it's penetrated, here you would have got kicked out, but you know, that happens. If you want to give it more room, then obviously you might not get kicked out, and down there 2011 would be your second area. And if you go back pretty far here for the last month or so, that got you in here at 1450, and you're still in. Not a bad average to work with. Okay, so that's Tesla. Next one up is Microsoft. It had a pretty good size day today. It was up a couple percent, I think. Let's see. Microsoft is, yeah, up a couple of percent, 221. Hasn't made a new high yet, but it's certainly close. Looking at a long-term graph, or a longer-term graph, I'm just going to go back a year. Yeah, this one got you in at about 155, right? And you're still in there. Look at it, test that blue line. You see, that's why we use these averages, because sometimes they come in handy. Test, 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 never fade. Blue line's rising, so it's a bull market, right? Now, how's the RSI doing with all these new highs? And again, RSI up here was 62. Up here it was 70, and right now we're at 64. So again, not much of a divergence, and it is above 50, so that's all positive. Red line comes in at 209, 208. So you want this thing staying above 209, 208. Okay, let's look at it on a shorter term basis, say 6 months. And then we can look at, see, there you go, the blue line again. Just stick with it. Breaks underneath there, underneath 210, 209, which is the numbers I just mentioned. There you go. Then you'd be more concerned. So keep an eye on that. If you're a longer term holder, you definitely want it to stay above there if you can. You know, don't forget, when these things are way, way up, there's an arsenal of option tactics out there. I've been doing this for decades, so obviously I know all of them. But the point is what I'd be looking at now is if I own the stock, I'd be looking at, should I do some covered calls, right? What are the out of the money calls going for? And if I'm concerned about protecting my equity on the downside, if I sell those out of the money calls, could I take those premiums and buy some puts? And then I have my stock with parameters. Parameters mean you've got an upside potential and you got a downside risk. Parameters, right? So that's one thing I'd be investigating now, just straight outright call selling against my stock. And then the other thing I'd be investigating would be a replacement strategy. What does that mean? Let's say I bought this thing at 170 when it told me to about a few months ago. And I've written it all the way up to 220. So I'm good for how much here? I got in there, let's say right around here, 165. That's 35 plus 20. I am up 55 bucks. Not bad. Now, say I'm concerned that this thing is getting a little extended. Well, a replacement strategy is where you sell out some shares. So every 1,000 shares you'd sell out would be 220 grand. And then you replace them with call options for limited risk, or a call spread where you buy the 225 and you sell the 240 and then you pay the difference. Okay, now you're not going to put in 221 grand that you just took out because 10 spreads or 10 calls aren't going to cost that much. And then if the stock comes down, everything you didn't spend on the calls you'd have in your pocket to rebuy into the stock if it goes down. Or if it keeps going, if you did 10 contracts, that's 1,000 shares. And so you still have some type of a 1,000 share position going in the options. So again, if you have questions on that, each week we do try to come out with different explanations on things at the weekly market update. And again, it is free of charge. So at the end of the broadcast, again, we'll tell you how to get on that one. All right. So anyway, what about on a short-term basis? Anything going on here that would tell us anything here? Sometimes if I'm short-term trading, we would use the 5-day graph. Okay, so where would I even possibly think about this thing on a sell side? Right now the red line comes in at around 220. This is a 5-day, so it's very short term. Getting under 220 would give me a signal that it might be turning over. Under 219 here would give me another signal, and it could indicate that it might pull back towards 216 to 218. And of course, if it gets under these numbers, then the whole thing could turn over and you could see something else. Right now, no evidence of that though. It looks good. But again, there's your high point, and we'll have to see if it cannot take that out. And if it starts taking out 219, that would be some indication of a rollover. So you want to take out 222 if you're long this thing. And if it starts taking out 219, that's your first warning shot. Okay, what else we got here? We've got YY. YY is looking like what? Let's find out. All right, it was down today on a big up day, so that's probably not a good sign. And let's look at it on a 1 year. I'll give you a long, I don't know how long it's been around, but you can hit a 20-year chart here and you can have the whole thing up there. It probably hadn't been around that long, no. So it's only been around since October 16. So let's go to a 1 year graph, and that might give us enough. Okay, so on a 1 year graph, it still looks okay. Why is that? Because the red line's turned up and it's facing up. It's still above the blue line, and the green line has turned up. So this thing should have support between 80 and 85, and it's trading 92. And so again, it doesn't look too bad. RSI is, well, let's see, has it made a big new high? No. All right, so the RSI is hanging in there. It's above 50. And let's look at it. So that's a 1 year graph, not a bad thing. I'd like to see the blue line going up and not flat, but it had a correction which flattened out the blue line. The red line came down, but it's turned up. So that's a good sign. And the green line's turned up. You'd like to see all of them cross the blue and get into the situation like here where you fly, right? That could happen as long as this thing can hang tight for a little longer. Let's look at the 6 month. 6 months, see what it looks like. Yeah, same story. Okay, trying to get going here. Get that green above the blue and that has to get above 85. 85 is a good number. Keep it above 85. I don't even know if I'd go down to 80. Keep it above 85, and that'll be good. Let's look at a 1 month. Yeah, still looks good. On this one, you can keep it on a real shorter leash because you don't really want this one underneath 87, 88. But clearly 85 is a good number too. But right now, it looks to me like 86, 88, you definitely want it above. And let's just see on a 5-day basis if it has rolled over. On a 5-day basis, it's kind of rolled over a little bit, but it looks like it's just dying to go back up. So again, on a short-term basis, let's keep it above 90, 50. A little longer-term basis, 88, 87. Longer-term basis, 85. You keep it above those numbers, you can stay constructive on this thing technically. I'm only going over the technicals on some of these because I don't know the companies very well. Okay, IL, and you're following the money anyway when you're trying to invest, so that's important to keep an eye on the charts. They don't tell you where it's going, they only tell you where it's been, but they sometimes are helpful to getting an idea of the momentum. Okay, this one was up a little bit here today, up 2.61, Illumina, and let's see. Let's go pull it back a little bit. Let's go to 20. How long? I doubt it's been around 20 years. Again, this doesn't sound like a 20-year stock. Well, it's been around since 05, sure. Okay, so there you go. This thing's been uptrending, uptrending, and uptrending. How's the RSI here with this brand new high? Is it confirming? Let's find out. No, not really. I'd be concerned here. Could be a deal where it's running out of steam. All right, but the trend is up, no doubt. And the aftermarket, it's up 44 cents. All right, now on a 1 year basis, yeah, it looks like it broke down. That's why I said I don't like that RSI diversion. It tells me that the short covering is over. It tells me that the volume's drying up. Two things I don't want to hear if I'm bullish. Okay, so you're up here at 400. Boom, gap down. Lines are crossing. So 370 is a rough racket for it right now. Let's see if it does rally. There's a big gap there, so they may try to get it up there if they get some news to which they can do it. If not, and it takes out 335 here, 340, then it could accelerate to the downside. But again, with that big gap here, if you can get above 360 and you want to play for it for a little pop, you could play for it for a little pop. Monthly graph, let's see. Yeah, and a monthly is starting to turn up a little bit. Like I say, it may want to try to fill in that gap a little bit. That gap is huge. It starts up here at like what? 390 something, and it goes all the way down here to 360. You got a $30 gap there. So, you know, this thing wants to go up. It can go up 10, 20, 30 bucks and still not do much technically. Again, the main resistance should be in this where these lows are, which is around 370, 377. Okay, so that's what I'm seeing on Illumina. Next one up is PINS, which is Pinterest, right? PINS. I always have a hard time figuring this one out. How do you say it? Pinterest? There you go, Pinterest. Again, these guys are an up-and-comer in the tech field and the communications field and everything else. So basically, you know, people put stuff on it, and then they obviously they share it and whatever else. So let's see what this thing looks like on a longer. I don't think it's only been around for a year or so. So let's go with a year chart and see what's cooking. Yeah, this thing comes out and then it goes in the toilet, right? Comes out at 36, back in the toilet to 12. Reminds me of Facebook. You know, Facebook came out, went in the toilet to about 12, and hadn't looked back since. So where are you now? You're in an uptrend, and what do you want to do? Stay above 28. There's a gap there. Is it going to come down and fill that gap? It's possible, because we do have some lower highs going on there, right? Nope, I got a double high there. Let's see what RSI did on this thing, see if it didn't confirm. Yeah, look, the RSI is not doing anything for you. So the bottom line is that it could very well come back and fill that gap, possibly. But if it starts trading above the red line again in 36 and gets above this area, it's going to be off to the races. Let's see on a 6-month basis what it looks like. Yeah, it's giving up a little bit. It's under the red line. So if it stays under here, then gets under 31, you know, that would be kind of indicating a bit of a turn. Again, if it started breaking above the red line, you know, and again, the opinion here would be is if you want to jump back in, there's a low right there of what? Let's find out. Yeah, a low about 33, 34 bucks. So if this thing starts going 35, 36, you obviously think it's breaking out. You wouldn't want it to come back here. So if you're short-term trading, you play the breakout, you put your stop in there, it jumps up to here, you move your stop up to break even, you got a free look at the rest of the movie. Okay, so that's basically it on Pinterest. Now let's go to the next guy here, which would be Apple. Yeah, this is the one that I'm thinking that the winds of change could be hitting. Let's find out. The high has been 515. So it's established a high of 515 yesterday. Right today it's at 506. And let's see, in the aftermarket is still 506. My suspicion, if you'll ask me my view, my opinion is between 450 and 500 area, you know, went a little bit further, was an area where it could end the rally because it's obviously extended. And then after the split, you know, the split comes out at, if it comes out at 515 or something, the split's going to be between 125 and 130, right? So between 125 and 130 is the new price. If that dropped down to 100, you'd still have a stock that's at $400. Now, this stock was at, you know, look where it broke out from. Sometimes these things come out and they come back to the breakout point. Don't you think 400 is about a breakout point? I'd be very interested in Apple after the split if it came down like that. You know, I mean, somebody's made money here. Is anybody going to take their profit? Okay. So the bottom line is that now, again, if it gets above 520, you know, we're into the ozone. This is a crazy market. You know, the valuations have been thrown out the window. Why? Because the 10-year note is down at 0. Although it is rising now, and that's something to keep an eye on. Because you can't print, you know, $12 trillion and not have it affect your currency, and you can't put that much money in circulation. We have a 30% jump in money supply in a year. That's off the charts. And the fiscal stimulus, like I told you, and monetary stimulus looks like about 44% of GDP. That's a ton of money they're throwing at this stuff. So that's why these things are rallying. Again, this thing isn't making that much more money. In fact, I heard their unit sales are down. The only reason the revenues jumped is they raised prices. And again, they probably pull forward a lot of demand. What does that mean? A lot of these companies have. Because, you know, people have been locked up and they can only spend money in certain ways, right? You can't go out and eat that much unless you want to eat in the street of New York. And you can't go traveling anywhere, so that's off the thing. And the casinos are all done. You know, they're not doing much. Everyone's got a mask and has to stay away from each other. So you know, you know, they've got a lot of money to put into tech, and their kids are going back to school, but they're not going into the school. They need technical equipment. People want to upgrade their communications because they have to work by the phone. So these guys have pulled forward a lot of demand in the months of March, April, May, June, and July. Now, again, they supposedly have a I-12 coming up, but they even said that it's going to be delayed. And Lord knows if it comes out at $1,200, how many people are on the 30 million that are on unemployment are going to pony up $1,200 because it works a little faster than their last phone. I don't know. We'll find out. But the way they're pricing it, you would think every single person's going to, and I don't know that that's the case. At any rate, here's where you are. You're up here at 520 almost. That's the high, 515. And you've got the moving average down here on the 1 year. Well, let's go to the 1 year graph. It puts it in perspective even better. I mean, this is a company that I think their revenues and stuff is growing at a 5% rate. They've gone from $360 during the drop all the way up to 515. And as you can see, the long-term moving averages, and these are only on a 1 year graph, you wouldn't even believe what they look like on a 20 year. Well, let's look at them on a 20 year so you put it in perspective. Look, I mean, come on, is that overbought or what? So at any rate, you can't badmouth Santa Claus. This thing's been delivering and delivering and delivering and delivering. And of course, if you're in any ETF, you know you got a piece of this action because they're in 234 ETFs. So if you own any kind of an ETF, more than likely you got some Apple on there. At any rate, for new money to come in and say, hey, let's start buying Apple up here, I would have to just say good luck, you know. Again, I give you my opinion. I think that there could be a pullback in September and October. And if there is, obviously, Apple would be probably part of it. Let's give you shorter term perspective, like the last 1 month. Then you can see exactly how nutty people have gone. Okay, you see it was down here at 380. Then they had the announcement on their earnings, and they pop up here to like 400. And then it's just been 20% to the upside, 30% to the upside. Okay, so if I'm in this stock, where would I like it to stay above on the, what are we on, the 1 month? Yeah, you definitely want to stay above the red line. If you want to keep it on a short leash, that comes in at 502. The green line comes in at 490, and the blue comes in at 479. You have a 1, 2, 3 formation set up. The 1 move takes you down here to 490. The 2 move takes you back to 506. You don't take out the 515. And then the 3 move is where you blow out the 490, and then you accelerate to the downside a bit. That's the setup it looks like it's trying to do. If we start getting under 500, that would add increase to it. And of course, if you break 490, you could be right in the middle of it. So this is what they call a 1, 2, 3 formation. 1, down, 2, rally back, fails to take out the high, and then the 3 move is very powerful if it can take out 490. That's my tea leaves on Apple. NVIDIA. Another one that's gone through the roof. Why? Because everyone's using it in their consoles, and the kids are going nuts with their consoles. And it's involved with Bitcoin a little bit, and Bitcoin went well. And of course, they've got chips going in a lot of Activision and all the games that are out there. So again, you know, people are all blocked up. The kids are going nuts. Heaven forbid they go over to the basketball court and shoot around, although they've taken the hoops down most of these places. But anyway, you know, they're doing the gaming thing. That's what they do. And so this is a company that benefit from that. And you can see here, we'll go back, we'll just give you an idea, go back 5 years on it just to take a look how crazy this one's gone, you know? But I mean, you know, a guy fell to earth and he's going, is this a high or low price? Is this thing extended or not extended? You know, the answers are pretty obvious. That doesn't mean they have to come down, but putting new money in here at $550, I don't know. Unless it's a Tesla, you know, it might be dangerous a little bit. Certainly backing off for whatever reason, you know, would not be a shock, right? Let's look at the 1 year average here. And there you go. Everything's good. The high number here is 476, and the lower number is 430. So it's very extended. You know, reversion to the mean. What does it mean? It means you get away from the numbers and you come back. You get away from the numbers, you come back. You get away from the numbers, you come back. You get away from the numbers, you come back. Now you're away from the numbers, and are you going to come back? Well, my feeling is after Labor Day, it could very well come back. Okay, so let's look at the short-term graphs. Again, same story, same story. Are we getting a confirmation in the RSI? Nothing tremendous, but nothing dramatic either on a diversion basis. Let's see if we're getting any more diversion on a shorter-term graph. 1 month. Okay, On this one here, yeah, you're getting more of a divergence because this thing had a peak here and a peak. Let me see. Let's go up here. It has a peak, and now it's up near the peak. So let's see what's going on with the RSIs. Yeah, you had peak up with RSI over here. It was at 78. And you got another one over here, and it's at 67. And now you're at up in this area, and you're at 68. Nothing tremendous, but it's certainly not showing a higher RSI during the rally. So again, on a 1 month basis, if you want to keep it on a very short leash, today's low was 507. You want to stay above there. The green line is a more of an intermediate average, and of course it has held better. So that one is at around 500 bucks. This thing starts trading under 500 bucks. You know, it might be indicating that 515 is the top for a while. And again, the trees don't grow to the sky. I'm certainly not bad-mouthing a company that goes like that, but I'm also realistic that, you know, the trees don't grow to the sky. And up here at this level, at this extended level, you know, looking for something to do some trimming, if you owned it, a little trimming. Or again, what about covered call writing? You think the calls aren't fat up here? And what about selling calls and then using the premium to buy puts? So if it does have a drop, maybe you have a $500 put in there protecting your equity. And then what about simply replacement trades? You know, you rode the thing from where? I mean, this is a 1 month graph, right? For gosh sakes, look at it. A month ago, you could have bought this thing down there at 400. So you rode it from 400 to 500. That's 100 bucks, 110 bucks. You take your 110 bucks off the table and you replace it with a call spread of 515, 535, or whatever you want to put on there for a fraction of what you're taking out. If it keeps going, you've got a hedge in case it keeps going. And if it has a correction, the rest of the money's in your pocket and you could maybe buy on a dip. Every strategy has a use, every strategy has a reward, and it also has a risk. So obviously nothing is for nothing. But there are certain moves you can make that if the market were to do certain things would be very much helpful. And so, you know, you can't get the exact benefit by doing a replacement trade as you would if you never sold it, but it'll offset some of the opportunity risk. And again, it's a strategy to consider, and it has merit under certain circumstances. Okay, Square. The show goes a little bit faster when I'm the only guy talking. I don't know. Square. Obviously, the payment processors. Why would I like that? Because David Tepper came out in his 13F filings, and in quarter number 2, he bought 4 of them. He bought Square, Visa, PayPal, and MasterCard. Obviously, his theory is people aren't going to want to touch money, so that means they're going to want to use cards, and they don't want to leave their house, so that means they're going to use cards. So basically, that's the idea. And so Square, though, is one that I actually like. PayPal. We like PayPal better, and Visa. In fact, Visa we like very much. Anyway, Square is a different ball game than either of the other 2 that I just mentioned. But Square right now, let's go back at a. Has it been around 5 years? Let's find out. Yep. Okay. So again, you know, that's pretty extended. Pretty big move. Obviously, something happened. It's called COVID, and there you go. So it's had a very big run in the last. But even just let's go back on the 1 year. Okay. So do we have a divergence? That's very good because we got a double top there. Actually, a little higher top. Do we have a higher high in the RSI? No. So that's a divergence. I'm sorry. The RSI here was at 78, and the RSI as it's repeaking is 63. Now that's a big diversion. And right now, if it gets underneath where this red line is, that might be the first shot done across the bow. That's about 148. Today's low 149. So obviously you start blowing out 148. You're underneath the red line. The green line hasn't been penetrated the entire time, and that comes in at 138. So your first warning shot will be at 148, and your second one will come out at 138. And 138 is kind of pretty close to that low down there at 135. So you like to stay above, if you're bullish, you want to stay above 135, you want to stay above 148. Start rolling underneath those 2 things, and you believe there could be a correction coming, obviously I think these would be some of the ones that would be prone to a correction because obviously somebody's made money on this rally, and in order to lock it in, they got to sell. Okay. Or again, what you could consider, how fat are the calls on this? They're probably enormous. And could you buy the put with the premium? Sure. And could you do a replacement trade where you sell out the stock and replace it with a call spread? It's possible. Okay. If you don't understand any of this stuff that I'm talking about, because I've been doing this for decades, this is not my first rodeo. At the end of the broadcast, you'll also find out on the website how to send an email. And you could say, Option Professor, I've got a question on such and such. And we'll try to help you if we can. Okay. Now, what else do we have?
Jim,
Yeah.
we have a question from the live audience.
Sure. What do you got?
Is there any good broker with clean trading software you recommend? So,
well, I mean, in this day and age, having started in the business with the dinosaurs, I've seen quite a bit. When people ask me what are the ones that people try to use, Interactive Brokers comes to mind right away because they are known in the industry as having very low fees. But everybody's got low fees now. Nobody charges hardly for anything. But they've got sophisticated software. This Thinkorswim is always advertising. I don't, we don't really use sophisticated software, we just basically use stuff like the relative strength and the moving averages, and we know how to read a chart. So, we really don't use them. But if you are interested in that, and these guys put the Elliott wave numbers up and the Fibonacci counts up, all that kind of stuff, and they got, a lot of different stuff. So if I was going to suggest to look into something, I'd say look into Interactive Brokers. And I would say if you want to look for Thinkorswim, they're kind of popular. But, firms like Vanguard, Fidelity, Schwab, and in this day and age, they've got a lot going as well. Maybe not to your liking. So, you go after the big three, Schwab, Fidelity, and Vanguard, see what they've got. And then if you want to go to the more active trading guys, I would just simply go with Thinkorswim or Interactive Brokers. There's 9 million ways to, 9 million stories in the naked city. Those are the ones that I have for you. Okay. Where are we here now? And those firms that I just mentioned, they're good sizable firms. So, they've got, departments that keep an eye on them. So from that standpoint, I think they're worthwhile as well. They're all very, very high cap, high net worth outfits. There's a lot of, lunch buck operations running around, but that's not where I would run into. Okay, so where we did Square, right? Okay, and no, we didn't go short term in Square, but we do have a divergence on the RSI. So that's well, I think we gave you the numbers: 148, 138. That's it. Yeah. Okay, next guy up is telephone. Verizon and telephone, people are starting to sniff around because, again, the 5G deal is supposed to be coming and people are really spending money on their communications and things like that. But, these guys do pay good dividends. That's really why you get into telephone and Verizon is the dividend. But if you got capital appreciation, you wouldn't argue. A significant amount of debt with some of these companies, I know that. But, again, they could be going someplace. Let's look at a long one on telephone because they've been forever. Yeah. Okay. They're still not looking so great. Those lines are not really bullish right now. So there's not a huge uptrend going on a 20-year basis. Let's look at 5-year. Yeah, same story. You're fighting the tape a little bit. That's a downtrend in the blue number. And the 1-year. Yeah, everything's pretty flat there. So well, let's just find out where it could run if it popped. I mean, it should run into some resistance at that moving average because it's pointing straight down. That moving average comes in at about 34, comes in at 33. Yeah, call it 34. So it comes in about 34 bucks. So you got to trade there possibly if it pops, right? You got to trade there. A lot of gap there that could fill. But as far as holding on to it, again, it has a lot more work to do. Looking at a 1-month graph, let's see if you got a better deal there. Yeah, it's popping. So you might be getting a trade between here and 34. I wouldn't argue with that. But I'd put it on a short leash. You see that red line right there? Comes in at 29.90. This thing trades under 30. Trades under, where's it at? No, it's right on the numbers there. It's right on the numbers. So let's pull it back to the 6-month and see if we can give it a little room. Oh, actually, I mean, really, today's low is 29.70. Yeah, you can put this one on a short leash. I'd probably wait to see if it can get some legs, though. You see the high there is 30.14. I'd probably be more interested in buying this at 30.50 on its way up to 31 or 34 and then stopping it out under 30. So I would keep this on a short leash, you know what I mean? Because obviously it may not go anywhere. And that average on the one chart at 34 and dropping means that there's clouds above you. But if you want to try to play for a pop with a short leash, I wouldn't argue with that. What does it look like on a 5-day basis? Yeah, 5-day broke out. So if you're day trading this thing, you got a buy signal at 28.85 and you're long. And right now you wouldn't want it underneath 30 bucks, which means hardly anything from here. You know, if you want to be nice and give it to 29.70, you could. But underneath 29.70, you know, you probably wouldn't want it on a short-term basis. So it looks like you might get a pop out of it, but short leash would be my suggestion. VXX, I don't really get into this thing because this is one of those leveraged things, and VXX, yeah. It's hard for me to figure out, and I've been doing it for decades, so I don't know how people who are coming off the turnip truck figure it out. You know, it's leveraged, and oh god, I keep going FVXX, and it keeps going somewhere else. VX, there it is, bypath. Okay, so this isn't really it's a contract. It's a like an ETN. You know, there's so many things to trade. I don't need to find the ones that I can't understand and they can't explain very well to me. So it does look like it's popping though. So if you want to play it, it'd be to the long side. This is a short-term graph, so it started popping today. Hey, listen, if we're thinking that the market could have a correction in September and October, well, you know the 20 VIX is not going to last. So obviously, if you had to do anything, if you had a gun to your head and you had to trade this thing, to the long side would be the way to trade it, if that was your opinion. But again, you know, I'll tell you, yeah, this is what gets me. This is why I know I don't know what I'm doing here. This thing goes from 75 from here all the way down here, all the way up to 75, and then it's down here. You know, this is it's wild. The overall trend of volatility is down, but there's a gap between here and there, and it's possible that we have a correction and it would fill in the gap between there and there. On a 1-month basis, let's see what it looks like. Yeah, so you broke out today, and you definitely don't want it coming back underneath all these averages. So where the averages come in, 24.5, something like that. So 24.5, you don't want to, you keep it on a short leash. If it wants to go to 25, 26, 27, God bless it. But if it wants to come down and do a retest, you know, maybe you don't want any part of it. So there you go, 24.50 is a decent line in the sand. If these 3 lines cross and start moving up, it could be something like here, where they cross and they move down and they never really cross again, and you're riding it all the way down, all the way down. So if this thing is turning, you might be able to get a run to the upside. Right now, you don't know if it's just going to be a what? A pop like this and right back down. Pop like this, right back down. Because the trend of the blue line is still coming down, right? So be careful. It wouldn't be something that I'd be interested in. Okay, NOW. Service now. I thought they were slipping. Let's see if they're still slipping. Oh, they're not slipping today. 29 bucks to the upside. This was, you know, again, part of the explosion we saw in some stocks in the tech sector today. Okay, so let's go back 5 years, put it in perspective on where it's been, where it might go. There you go. So it's really just breaking out here, and this was a big breakout today, no doubt about it. Okay, so looks like, you know, obviously the 450 area where the breakout point is would be your line in the sand. Will it come back and test that area if you're lucky and you want to get back in? Let's just see what it looks like on a 6-month basis. Yeah, so it's been telling you to be in here since 300. And so the fact that it broke to the upside is obviously more likely than breaking it to the downside, right? That's one of the reasons I like the moving averages. All the averages are pointing up, right? So what's the probability? It's going to break to the downside, right? No, the probability is going to break to the upside, which is what it did. So that's why I like to use the averages, because, that's the tape, and, you don't want to fight the tape, and surprises generally go in the direction of the moving averages. Not always, but, quite often. Okay, so service now looks fabulous, and again, just broke out. So, can't really say anything else. Then, if you're in there, hold on to it and see if there's more to come. It should be, and if you're not into it, 460 should be your. Well, if you use the averages, you got to go down to 442. This might be a better call spread opportunity. Why? Because the stock's already extended, and if this is just a fake and it's going to tank, you don't want to be stuck with stock at $500. But if it's for real, it's going to keep going, and therefore a call spread of 500, 510, or 505 and 515 or something like that, just to guess, might be worthwhile. So if it keeps going, you can make a hit, and if it tanks, you got limited risk. All right. So there you go, ServiceNow. Hey, listen, it's core. I got a little bit of time here. I wanted to go over some of the things that I've been following and that we are taking a look at, which I update. Now, like I say, when we were in March, let me go over it again. I'll show you the ones that we were talking about in March and April. Okay, these are the ones that we were talking about in the weekly update as our opinion and our observation. And you can see how it's been. We were talking mega cap growth. Okay, mega cap growth. And you can see, going from 135 in the, there's where's here? There's April, right? There's March, it gets above it in March, right? Starts getting above the red line. So we start bringing it to people's attention, gets above the blue line. So March, April, this is the stuff we were talking about. And nice run, right? What else did we talk about? We talked about tech, obviously. How could you have played tech? Well, one way of playing tech is through an ETF. And let's see how that did. Do-do-do-do. Come on, guys. Thank you. These are 6-month graphs, so they're going to go back to the beginning of the year pretty much, a little, right after the move. Okay, so this was tech. Where did we get into this thing? Above the red line was when? March, April. Then in April, May, right? And what kind of a run did we get? A great run, okay? Other thing we talked about with the semiconductors. What do you use for semis? We use SMH. What are you going to use? Am I going to go pick the right one? No. I have an Irish background. Murphy's Law, right? Anything can go wrong will go wrong. Well, if I get into the wrong stock and the sector jumps, I'm not going to feel very happy about that. Okay, as you can see here, we're here, and then it runs, and then you're all set, all the way up. Still in there, right? Okay. Now, what else did we look at? We looked at consumer discretionary. Consumer discretionary. VCR. Okay. Consumer discretionary. Now again, this is an ETF. It's going to have a whole bunch of different stocks in there, but they're going to be about consumer. Okay. This thing's going slow all of a sudden. And it lost my, it looked like it lost my parameters. So I'm going to put the let me go back. Not letting me do parameters now. Anyway, you get the idea. Those were the ones we were talking about then. Now we're talking about a different sector, different sectors to have in a barbell approach. And it is called, I'm going to come out and come in if I can't get my charts squared away here. Okay, there they are back. Okay, so again, these sectors that I'm focused on now, here's what they're into. They're into things like financials. They are into things like healthcare. They're into things like industrial and consumer services and goods. That's where they basically are, okay? And these are the ones that I think right now you'd want to keep an eye on. So the first one is going to be called mega cap value. And you'll see if the averages come up. There you go. Okay, look, I'm looking at the things on a 1-year basis. And I'm going to show you why I'm thinking. This stuff looks like it's turned, right? You got red, green, and green. I'm looking to buy what's going to, in hockey, you want to go where the puck is, not where the puck was, right? This is where I think the puck is going if this market is for real. You see the June high there? Okay, that's there. You see right here? I am, and we are looking at a situation where if we can get above 79.80 and get some momentum going, because look at the RSI right now. Right around that 50. That's good. Now, if we get a rally, we should be able to take out June high. That's about 82. And then this is the year-to-date high, up around what? 90, around 90. Okay? So, again, we're looking for what? These type of stocks, healthcare, financials, industrial, and consumer goods and consumers to get going. And we're looking for it to take out the June high and go back to where these highs are. Because you realize the S&P and the NASDAQ have not only go back to this year's high, but they've blown through them. So if these things can play catch up, there should be something happening. Okay, that's one for you there. Another one is called Starbucks. Now, Starbucks, I don't know about you guys, but I drink one every day. So they always, what did Peter Lynch say? Buy what you know. I definitely know Starbucks. Okay, now Starbucks obviously was going nowhere, and we have been initiating positions here at 76 and 78 and stuff like that. So basically, what are we looking for? We're looking for it to take out this high, which is at 83, and then go after the yearly area, which would take us up anywhere between 95 and 100. That's a pretty good jump. And, again, the stuff that I'm talking about, some of them pay very good to dividends. That MGV is up towards 3% dividend. That's not a bad cash flow coming off of your investments while you're waiting for your principal to run up. Another one is international. This one's got Alibaba in it. It's got, Tencent. It's got Toyota. It's got a bunch of stuff. And on this guy, it's already started to go pretty good. And this is an international deal. And there you go. We can go back towards 58, 55, 58. But again, if it blows that out, it'll keep going. And it does look like it's still in a good trend. Let's see. Another one that we're looking at here is S&P value. And this is, again, going to pay a good solid dividend. And again, it's in the sectors we were talking about. And let's take a look and see what that's doing. And again, like I say, it's almost getting ready to go up towards its, this is a one, I got to go back to the 1 year. I thought there was some weird. Yeah, this thing can go up towards 125 if it goes back there, and it's trading about 111. Now, there's some of them that have even more potential if everything gets back on the bicycle. Because again, the first thing that goes is your tech, and then you're supposed to get the rest of the stocks that aren't just tech to join in. That's the idea. You saw the transports go nuts, right? Because UPS and FedEx started getting all that delivery business. And of course, the railroads have to deliver stuff too. So you did see a big jump in the transports, and they've gotten into the game. So if these guys get into the game, there is an awful lot of upside to be had. This stuff here, this is small cap value. And there you got, it came down from 140, and the darn thing's only at 115. So if we can get above 120 and get moving, there's a gap there and everything else. So if we take out the June highs, and then we go after the yearly, the year-to-date highs, then these things have a lot of potential. And that's why we're looking at those now. And then, even companies like GM, if the cars thing is going to get coming back again. This is one that looks like it's trying to make a turn. Didn't do much today, but let's take a look at the graph and you see, will it take out the high there? And if it does, will it go back up towards where it came? Then there's some jump there. Also, some of the epicenter stocks, Avis Rent-A-Car, people aren't flying anywhere, right? But they're doing what? they're driving, and they might rent cars to do it. And again, you know, Hertz and these guys are two of the big games in town. So here you go. This thing is been rising, right? Will it take out the high there? And if it does, can it go back to where it came? And if it can, there's still potential here. So you're keeping an eye on some of these things that haven't moved. Marriott Hotels is another one. And Marriott Hotels. Come on, Marriott Hotel. Yeah, I mean, this thing came down from 150. Okay, will it take out the June high? Well, if it does, I mean, excuse me, if it takes out this high here, it starts trading above 105, then you can go after 115. If you go after 115, are you going to go after that gap up here? Over time, you might. That's where the puck may be going. We already know where the puck has gone. It went into tech and mega cap growth. Okay, two more, and then I just wanted to close out with a couple of comments. Wells Fargo. How many people hate Wells Fargo? Hey, how about everybody? Right. Anybody been around them, though? Their branches are still open, and there's still a ton of customers. These guys got a ton of customers. Now, what do you call it? Buffett has been buying Bank of America, but he still owns, I think, $8 billion. I don't know how much, a ton. You go look at his 13F filing. He still owns this thing. It's too early to buy right this second, but look at the darn thing. Went down from 54, and it's down here. The low was 22, right? So if we could take out 26, because unfortunately I can't get the I can't get my thing up here right now. The my RSI and everything. Let me see if I can get it off this thing. Hold on, because this is, I think this is very interesting. Wells Fargo and Prudential Insurance. They both look like very good, interesting things to me. So let me. There you go. Okay, let me put Wells Fargo in here. I mean, if they're not going out of business, and this guy, they got a new CEO. He's already cut out a whole bunch of different things. But you don't want to invent momentum here. You want to wait for momentum to occur. And once momentum happens, you're coming out of the doldrums here. And again, these guys got a huge client base, a huge asset base, and at some point they're going to forgive them that they opened up some accounts they shouldn't have done or whatever the heck they did. And when they do that, and they got all these people fired and everything, you know, they're going to be looking at a situation where this stuff is way down here, okay? And if it starts breaking above 26, you know, even going back to 35 is not, and that was the high of the June, 34, 35. Prudential Securities, same. Prudential Insurance, the same idea. It used to be at 95, it's trading in the 60s. Okay. All right. I'd like to do a couple of things now before we close out. One is I want you to be aware that Option Professor does have a hypothetical account that is third-party verified, and it was started in July, a month ago. The result for July was a profit of 15.6%, and month to date, it is up about 19.9%. So in the 2 months that Option Professor has been doing trades in this account, the returns have been cumulative at 38.9% year to date, or month to date, including the 2 months, and that annualizes out at a very, very high number. So there's a couple of things you can do if you are predisposed. One is you go to the website optionprofessor.com. OPTION, Professor, PROFESSOR.com, and you put your email address in there. That gets you the free weekly update where I go over a lot of information that you can use and a lot of information, our opinions and our observations on everything from the stock market, current events, of course, the bond market, which again is starting to get higher yields, which could affect the markets, the US dollar, which we were very bearish on when the euro was 110, and we're now strong on while the euro is coming off of 120. International markets, we showed you the VEU. We watch international markets quite a bit. We also go into the gold, silver, copper, and platinum. We follow that. And we also are following crude oil and natural gas. Got a big storm coming. So we're watching that. And of course, agricultural products, which have been very active. We got the soybeans focused on right now. We've also been focused on sugar, coffee as well. And so there's been a lot of opportunity in those markets as well. So we do go over quite a bit of information, and it is free of charge, and it comes out to you weekly by putting your email address in at optionprofessor.com. And then, of course, if you'd like to email us and let us know that you'd be interested in looking at the trading activity in the account that Option Professor is handling, which for the first 2 months certainly has had a very strong outcome, then simply email optionprofessor@gmail.com, and you could be put in touch with how you could get that as well. So again, it's optionprofessor.com. Put your email in. That'll get you the weekly update. And optionprofessor@gmail.com if you want to make an inquiry into the trading account and how you could gain access to it to see what's going on in there. All right. It's been very good to talk to everybody here today. I look forward to we look forward to hearing back from you at Option Professor. And again, we'll be in touch with you in the weeks to come with the ordinary updates we have on Mondays and Tuesdays, plus webinars as well. Right now, again, David Cosbender is going to take it over. And I want to thank everybody for being here. Good luck and good trading, everybody. And we'll talk to you down the road.
All right, thank you. A lot of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast network. You can also go to TimingResearch.com to get access to the recording of this episode as soon as I can get it posted, and also the recordings of any of the past episodes or events there as well. So just want to thank the Option Professor again of optionprofessor.com. Thanks, everyone.
Thanks, David.